And it's time now for our market monitor, who has some names of stocks that he says will benefit from demand in the housing industry and any tax rate changes out of Washington. This is his first time on the program, so let's welcome Michael Sansoterra. He's the Chief Investment Officer and Senior Portfolio Manager of the Ridgeworth Sylvant Large Cap Growth Fund, which is up about 9% this year. Welcome. Nice to have you here.
Nice to be here.
You're talking about growth, but you say growth is a condition, not a category. So you want to look for companies that exceed those expectations.
That's right. Growth can happen anywhere, including in cyclical businesses like housing is a great example. The trick is really understanding what's already priced into the market, how long can those conditions persist, and will you be able to profit from it in a longer-term perspective?
Let's get to the stocks that you like this week. D.R. Horton, the biggest home builder in the country. Is that the only one you like, or why do you pick this one?
Sure. No, that's our favorite one. That's the one we own from a home builder perspective. We like their ability to execute, first and foremost, in 27 states at the low and medium range of the market. We also like their ability to purchase land and raise price. What we've seen through D.R. Horton through the years is really the ability to find places where homes are really needed, price accordingly, manage accordingly, and take market share. They're one of the fastest growing home builders in the country, and that's because of execution, and that's part of the reason why scale has been real important for them.
Also, the remodeling trend, kitchens and baths. You've picked a company, Fortune Brands Home and Security, that really has quite a big footprint in that particular area.
They do. Kitchen cabinets, faucets, as well as doors, windows, and security. This is a company we've owned for some time. We've seen their kitchen cabinets business get consolidated. It's been a very fragmented market. They're doing the same thing now with plumbing, buying some smaller competitors. They're going to take their plumbing revenue from $1.5 billion to probably closer to $2.5 billion in the next 4 years. And we think as they do that, they'll do it more profitably than many investors suspect. And at the same time, will take market share from a lot of the other smaller fragmented players in the space.
And sort of in the same category there, you have A.O. Smith in the boiler and water tank area, right?
Correct. Decidedly not as sexy a business. It's more of a GDP plus a little growth business for water heaters and boilers, both on the residential and commercial side. But what we like about A.O. Smith is really their China exposure. They've got about 30% of the business in China. It's been growing north of 20% for 10 years. I think for the next 10 years, it'll probably be growing in that mid-teens range. And really what we've seen is their ability to sell ancillary products to the Chinese, not just water heaters, but water purification and air purification. These are things that Chinese market wants pretty bad. And they've got this kicker that should the Trump administration manage to get some tax reform done, they could bring a lot of cash back to the United States from China.
On that note, Michael, thank you so much for joining us. Michael Sansoterra with Sylvant Capital Management.
My pleasure. Take care.